Hello everyone, Prem again here. So this time we're not going to talk about anything about market because IPOs are coming up pretty predominantly. It's last couple of weeks you see many IPOs are coming, and tomorrow is another IPO which is going to hit the market, which is nothing but FirstCry. So I have made a details about how this FirstCry is going to perform during this week schedule. Okay, so this is my site. If you're not booked up, if not subscribed to my Telegram channel, you can use this link. Use this fabulous indicator link. Search in Google Telegram. Find it. You'll find my group. And every now and then I used to put the IPOs and anything related to um, the um, the financial thing which everyone are expecting. So those are predominantly will be put in this particular site. Okay, particular Telegram. Sorry. So first thing is about FirstCry today. So FirstCry is for me is neutral and it's above neutral. It's not neutral, it's above neutral, and I'm looking for a buy for FirstCry. Sir, are you going to buy this IPO because the market is so volatile? It's going down like this. Are you going to buy this IPO? Yes, I'm going to buy this IPO. This is really a good one IPO, which I really liked it. Okay, so what the use of this IPO is? It's a FirstCry which has been a child product where most of the diapers and those things are being bought from FirstCry. So they are the first person to innovate and give us a bigger discounts in diapers, those things, right? So I really like this company. Okay, this is a parent company. Parent company is Brainbees is launching an IPO with it's like 4,193.73 crores. Okay, it's like this much of equity shares is pending as amount here. So it's range is between 440 to 465. So okay, so 465 is the rate that FirstCry is looking out for in the IPO rate. But if I see in the gray market, I just went and watched about the gray market. It's somewhere around 80 rupees up. So 80 rupees up, and that means that 80 rupees from here is somewhere around 545. So that's where the price of FirstCry is currently positioned. Though the market is falling down, this is around 20% up from the IPO, which is really, really good. And think of if the market there wasn't going on the upside, if this has been placed, it would be somewhere around 45% to 50% on the price scale. So this is very good share as thinking of the market is going down. This is really a good option for going for IPO. Okay, this is the first company I said. First on India is leading online and offline retailers for baby and children product. It has 900 contract manufacturers and employs around 3,400 full-time employees. Okay, so it's a big company. Okay, and the revenue is somewhere around 6,575. It is up from the previous year, like 5,731. It's now up by way ahead. Okay, so revenue is up. Okay, and they report a loss. They report a loss of around somewhere around 170, 160 rupees. In fact, 160 crores is loss. But if you think of asset, they have increased the assets from 7 1. They have assets of more than them. Considerably, they have increased the assets also. It's a they have increased the asset size. They have increased the assets. So it's really a good performance aspect of financial. It's really good. The strength of the company is their position. They have large customer base, predominantly on the child care products, and then they have dresses for the childrens and those things, which is really good on that. And then they have a offline store also. They have online as well as they have opened many stores in all the metro cities. I can see them everywhere. And they're having expansion plan. Okay, they want to set up new stores, warehouses, and they're also planning for international growth. Okay, so this is really good for that. Okay, okay, and risk is this is a online business. There will be lots of issues with the supply chain. They could not deliver on time or something like that, or something related to transportations or the contract the employees, or in fact with the contract manufacturers, it may have an issues. Okay, because they have to depend on that particular thing. So that's it only risk I'm really seeing from the for the FirstCry things. And all the ways, people will go for Amazon, Flipkart. There are many stores are there. We are giving many discounts. Because of that, the FirstCry has come down because these were the first person who gave more number of discounts. And from there, you find all the children products. Now it's around 20%, 30% discount, which is there. So they are the first starter, and then everyone catched up. And Amazon is a very big company, so they are giving so much of discounts for all the products. And Flipkart catching up, and then we have Meesho's, all these things are there. Those are competitive retail markets. So they are like risk for them. And there are, because as and when, like you see August series, you see great Indian sales are coming up. During that period of time, the first guy has to cope up with their own kind of a sales. If they're not giving that kind of a sales, they are not going to think anything. But overall aspect of it, it's a buy for me for a 20% gain in the market. So if you really want to have a better thing, take it an IPO, book it when you get 20% of it, get out from the market, because the risk is very, very big risk. But once it stables and everything, once the market is stable, then go for this particular thing again for a big, big move. Okay. So eventually I'm looking out for a bigger target, but I'm not going to disclose anything right now. But 20% is the first thing which I really want from this particular company. Okay. So thanks for watching. And if you're not subscribed, once again, I'll tell you, if you're not subscribed to my channel, you can subscribe to the channel list. Okay. So that's it from my side, and happy investing, and make sure that at least you try for this company. Take care and bye-bye.